Today we're going to look at the gold to silver ratio and how you can use it in your trading. Firstly, take a look at this chart of gold, long-term chart. Notice how it's fairly flat for a long time, and then we peak, we pull back, and then we start to peak again. Now take a look at silver, similar but not the same. We're flat for a long time, we then have a bull run, a pullback, and then we start to take off again. Now if you overlap the long-term gold and silver charts, this is what you're given. At times where gold is much higher than silver, you could say that gold is overpriced compared to silver, or that silver is underpriced compared to gold. So what is the gold and silver ratio? It is how many ounces of silver it takes to buy an ounce of gold. And you can find out what the ratio is by dividing the price of gold by the price of silver. So if the ratio is 50-1, it will take 50 ounces of silver to buy 1 ounce of gold. How can we use this to help aid our trading decisions? Well, you've got to think what it is. It's comparing the values of gold and silver. Which one is the better value investment at the time? Could it be a signal to take profit on an investment? So this is the price of gold. You can see we're rocketing up. This is a daily chart. This is just before November, October time. And then if I switch over to silver, you can see we've been ranging for a long time. This is October, yeah, we pushed up, but we're down again. So that means the ratio is going to be higher because it's going to cost you more ounces of silver at this price to buy gold. Therefore, silver could look like a more attractive investment at the time. You know, today the gold silver ratio is 88.5, which is fairly high. It's not the highest it's ever been. You know, it can top out 100. But the typical range for the gold to silver ratio is between 50 and 70. So at 88, you could say, yeah, is gold getting overpriced here or is silver underpriced? Personally, I believe silver is underpriced at where it is now. I wouldn't say gold is overpriced necessarily because of everything in the world going on. The Middle Eastern conflicts, there's still the Ukraine conflict. The US government's debt burden is absolutely massive. All of these are things that support gold. I've been a long-term buyer of silver since about $17 or $18 per ounce, and it's something that even coming back down to these levels I think is another great buy opportunity. Now if you buy it physical, then it's more expensive and it's a bit novelty, but if you just purchase it online, futures or ETFs or something, you can get much better value. So the key takeaways here are that it compares the relative value of the price of gold and silver, and therefore is used as an indicator as to whether one of them is either overpriced or underpriced, and then you can use this to aid your investment decision. And this is not something that you would use on its own to make a trading decision, although some investors do. It's not recommended, because gold right now, even though the gold to silver ratio is high, gold has the potential to go a lot further because of the geopolitical issues we're facing right now. I hope you've learned something. That's the gold to silver ratio. I'll be back next time with some more lessons and market updates.